The biggest threat to your wealth isn't market crashes, high fees or bad investments. It's your own behavior which gets hijacked by emotions, fear and the dopamine-driven tricks of modern investment platforms. So let me explain. Imagine this. You sit down to relax for just one episode of your favorite show on Netflix. But before you know it, 3 hours have passed and you are halfway through the season. Why? Because companies like Netflix, YouTube and TikTok have mastered the art of hijacking your brain. They use psychological triggers to keep you watching, feeding your brain with a steady stream of dopamine hits that makes it impossible to stop. And in this documentary, The Social Dilemma, they will tell you about this problem.
Everything they're doing online is being watched, is being tracked. Every single action you take is carefully monitored and recorded.
A lot of people think Google's just a search box and Facebook's just a place to see what my friends are doing. What they don't realize is there's entire teams of engineers whose job is to use your psychology against you.
Now, here's the scary part. The same tricks that keep you binge watching Netflix or have you stuck to Facebook, Instagram or Twitter are being used against you when you invest. So let me explain. Apps like Robinhood and other modern gamified investing platforms making it feel like fast-paced game. And here are 3 things that they use against you. Instant notifications that make you react more emotionally. The more stress and the more emotion, the less you are able to make rational decisions. Bright colors and confetti when you place a trade. The steady stream of dopamine hits and rewards. And then instant buy and sell buttons to make decisions feel effortless. And what happens? Before you're even aware of it, you start trading more often, not because it's smart, but because they hijacked your brain.
Co-inventor of the Facebook like button.
I was the president of Pinterest,
Google, Twitter, Instagram.
There were meaningful changes happening around the world because of these platforms. I think we were naive about the flip side of that coin.
Facebook discovered that they were able to affect real-world behavior and emotions without ever triggering the user's awareness. They are completely clueless.
And of course, you are smart. You and me are the same. It won't happen to us, right? Because we are different. But if you think about it, why does our brain respond more strongly to bad news than to good news? Here's the answer.
Fake news spreads 6 times faster than true news.
We're being bombarded with rumors.
So we live in a time where people walk with their heads down, glued to their phones, and constantly bombarded with market updates, stock alerts and breaking news. The market is constantly flashing new opportunities in front of you. A stock just dropped 5%. Should you sell? A new IPO is launching today. Should you buy? Oh no, we didn't have seen a crash in years. The market is way too high. Should you sell? And before you know it, you have made dozens of trades in 1 month.
There's something about disaster and destruction that has a tendency to draw an audience. High ratings for TV coverage of a plane crash, rubbernecking at a car accident, viral photos of a hurricane's aftermath. These images are devastating, saddening, and sometimes scary.
But here's the hard truth. More trading leads to more mistakes. More mistakes leads to more losses. And more losses leads to you paying for someone else's gains. And I can tell you this one thing. This is exactly the reason why many wealthy clients choose to outsource their money. Because they understand that their biggest risk isn't the market, it's themselves.
When you witness disaster, even when it doesn't happen to you, your brain goes into survival mode. The images and information you receive stimulate the amygdala, which is the part of the brain that manages emotions and survival instincts. The amygdala then sends signals to your frontal cortex, which is involved in analyzing and interpreting information as well as regulating your judgment. This process triggers the fight or flight response, and some people crave that adrenaline rush or that intensely heightened emotional state, even though it's actually negative.
Many wealthy investors are willing to pay for financial advisors or asset managers not because they can't invest themselves, but because they don't want to be in the driver's seat when emotions take over. They know that emotional investing leads to bad decisions. Staying passive beats active trading in the long run. Focusing on their career or business is a better use of time. And yes, they pay fees. And yes, it costs money. But they also avoid panic selling, overtrading and emotional mistakes that could wipe out their gains. For them, the cost of an advisor or asset manager is worth if it helps them avoid costly emotional decisions.
We get rewarded by hearts, likes, thumbs up, and we conflate that with value and we conflate it with truth.
A whole generation is more anxious, more depressed.
I always felt like fundamentally it was a force for good. I don't know if I feel that way anymore.
Because there's a recent study analyzing over 5 million US retirement accounts during the COVID-19 crash. It proves just how dangerous emotions can be. What they have discovered is that when the market crashed, many do-it-yourself investors sold at the bottom, missed the recovery, locked in their losses permanently. This is one of the biggest risks of managing your own money.
We built these things and we have a responsibility to change it. The intention could be, how do we make the world better? If technology creates mass chaos, loneliness, more polarization, more election hacking, more inability to focus on the real issues, we're toast.
This is checkmate on humanity.
When emotions take over, you become your own worst enemy. So how do you stop emotional investing and save thousands of dollars in the long run? Here's a simple strategy. Use a simple low-cost portfolio index fund and ETFs that outperform most traders. Set and forget your investments. Automate contributions and check less often. Ignore the noise. The financial news, social media and trading apps want you to react. But the wealthiest investors stay calm and let their money grow. So let me know in the comments below, have you ever made an emotional trading mistake? And what's the biggest lesson you've learned from it? But first, if you enjoy videos like this and want to discover smarter and faster ways to build your wealth, even if you are not there yet, be sure to subscribe to my channel and stay up to date. Because in my opinion, the biggest lesson isn't just about making mistakes. It's that some investors never start at all. So if you want to learn how to build a simple, high-performing portfolio without emotional trading, here's what to do next. First, make sure to subscribe to this channel. The more people who like and engage with this video, the more investors will see this message and the more people will start investing the right way instead of losing money. And secondly, once you subscribe, you will get access to future videos like this one. And I will walk you through exactly how to build your own 3 ETF portfolio to grow your wealth the smarter and faster way. Click on the next video and I will see you there.